Hey everybody, hey traders, Chris Moore here. It is around 2:45 p.m. on Tuesday, September 23rd. A little bit of a market update. We had a couple levels that I wanted to point out. If you watched my video during FOMC or leading into FOMC, I was pretty spot on with the noise and the indecision candle. So what we ended up having was a very noisy FOMC and a bit of a nothing burger. The market highly anticipated the rate cut. It got it. The market did sell off with some of the comments that Powell had, but quickly came back in to close just barely red for the day, and then gapped higher aggressively on Thursday, Friday, and then yesterday, Monday, was a pretty big rip for a Monday. I usually don't see a lot of directions on Monday, and we got a big one to the upside. Now, I'm taking a look at the technicals, and it was pretty straightforward. When you take the measurement of the FOMC candle and you look at a breakout either going down 100% or you look at a breakout going up about 100%, it worked out to the upside. So going long to that 100% breakout was pretty awesome. And now looking to, what I've been positioning for these last couple of weeks is as this breakout happened through the Fed, I was positioning for 6750, 6800, 6850. I've got a bunch of broken wing butterflies in the SPX that as long as price can stay below 6750 or 6800 by the end of this quarter, which is next Tuesday, or by October 3rd, which is a non-farm payroll day, I'm hoping that we are going to see some bit of technical weakness in the market just to come back into a 21 period or a 50 period moving average. Candlestick formation wise, right at the top of this breakout today looks like we are forming either a dark cloud on the SPX or a engulfing bearish candle. And now the question is there follow through? This might be a indecision zone where the market doesn't do anything and then it takes a little bit more time to roll over, or it just fights inside of it and then just proceeds to go higher in this zombie melts up market. What I did notice today, at least in the short term, is that we have gone into a negative gamma environment for the day. So if this continues, this would be where puts might get a little bit more expensive. This might force some dealer flows to be buying puts and going with this to hedge to the downside. If we get back above 6670, we're right back into the zombie market environment. If we get below, which we are now below 6670, and we start heading lower with negative gamma, that is going to possibly be this cascade where there's not much protection to the downside. We might see the market quickly come back down to these FOMC lows. That is 65.51. There's also a monster gamma pin in the options market at 6,500 with a JP Morgan collar trade. So I